So here you see both food cost and beverage cost on the monthly income statement. But how did they get those numbers? Over the last couple of classes, we've started to explore how inventory has had an impact on those numbers. When we took inventory at the beginning, you add up everything that you bought, and then you subtract your ending inventory at the end of the month. And basically, we start with this at the beginning of the month, this dollar amount, and we buy more. So remember the equation: beginning inventory plus purchases minus ending inventory gives us cost of goods sold. But if we feed employees, how do we account for the meals that we feed those employees? But aren't employee meals just part of labor cost? Why, yes, they are. What we really want to do is calculate food cost that we can relate to the products that we sold. Then we can take a look at employee meals and what we can do to account for them and where they're charged to. There are 4 methods that we are going to go over and that you will need to calculate for the next quiz and for the final exam. So we use these 4 methods to calculate the cost of employee meals. Once we know how much we spend on feeding our employees, we can subtract that amount from our food cost and put it into labor cost, a component of the income statement. The first that we will discuss is the method that works well when you have an employee cafeteria or cafe. Usually you would find this in maybe a larger hotel or resort, or maybe you're working for Compass, Aramark, Sodexo, Buchenheimer, and you're feeding employees of a company or employees of your own company. So that is a benefit to those employees to be able to eat in property, get a good nutritious meal. But when we talk about restaurants should hopefully be doing the same thing because we work hard in our profession. The way that we would do it for the cost of separate issues is to treat it as a separate purchase. The employee kitchen area simply takes the food that they already have started with, so the beginning inventory. Then they requisition product in to cook and feed employees. That would be our purchases. And then we'd minus what they had left from the employee meals at the end of the month. So ending inventory plus purchases minus the ending inventory. Separate issues are basically food requisitions from the storeroom. So we see employees are fed meals created for them, often in the employee cafeteria setting. All of the food that we need to feed those employees are requisitioned from the storeroom area of the hotel, of the food and beverage operation, and are recorded to the cafeteria. So you create a separate food and beverage outlet for the cafe or the cafeteria. Whatever food goes into employee meals goes from the storage area to the cafeteria or cafe to the kitchen, gets recorded and counted as food cost. So as we've mentioned, we count it as a purchase when we transfer from the storeroom into the cafe. Beginning inventory in the employee meals area would be the ending inventory of the previous month, as we've talked about. Our purchases for this example, though, would be requisitions of food products from a food and beverage outlet or the storage area to the employee meal area, the cafeteria. So it could be food products coming directly from the storage areas, or it could be excess food production of food from the banquet kitchen, from the restaurant kitchen, that we're transferring to the cafeteria so that it can be used for employee meals. That would give us our total available for employee meals. We would then at the end of the month subtract our ending inventory in the employee meal area, and that would give us our cost of employee meals.